Kia ora. My name is Bakir Hussain, and I want to talk about why I got nearly double the average income tax refund this year. I will also talk about a few practical and easy tips, which will hopefully make it easier for you to get your income tax refund if you are due one. If you are interested in learning more, then feel free to sign up to my newsletter, and I'll put a link to that in the comments below. So let's dive in. Firstly, some high level numbers. The IRD issued more than $2 billion in individual tax refunds last year in 2023. To be exact, that's $2.182 billion. Now, of course, that is just the total, but what about the average that an individual ended up actually receiving? As per the Inland Revenue Annual Report for the year ended 30th June 2023, the average over the last 5 years from 2019 to 2023 has ranged between $354 and $432. I received nearly double the 2023 average, and this was 804.97. Now, it's important to know that tax refunds are not guaranteed each year. Many people think they will definitely get a refund, but that's a misconception. For instance, if your tax deductions throughout the year were accurate, you might not get a refund at all. It's all about how much tax you've paid versus how much you owe. So, what can you do to receive your tax refund? Well, the number one tip that I can give you is to keep your details up to date with the IRD. You can do this online within My IR. If your details are up to date, then the IRD can get your income tax information faster and they will pay any refund owing straight away as soon as possible. This includes your email address, postal address, and your bank account information, including your contact number. And if you are an individual that is linked to a tax agent, then simply talk to your accountant. For most individuals in New Zealand, there's a really good system in place where you don't have to do anything. The way this works is that the IRD will send you an automatic income tax assessment between May and July each year. This applies if your income is already taxed before you get paid. Examples of this include salary, wages, and investment income, such as bank deposits or savings interest. The automatic income tax assessment will show either one of three things. Number one, you are either due a refund. Number two, you have a tax bill. Or number three, you have paid the right amount of tax. In case you received an automatic tax assessment and ended up with a tax bill instead of a refund this year, then I suggest that you talk to your employer about whether they're deducting the right amount of tax. So, why do these income tax refunds even happen? Well, there are a number of reasons for this. By far, the most common one being overpayment of PAYE or pay as you earn tax. For example, your employer might deduct more PAYE tax than necessary, and this means that you could be entitled to a refund. In fact, a significant number of refunds are due to such overpayments. Generally speaking, the PAYE system assumes a steady income throughout the year and may not sometimes adjust accurately for fluctuations. So sometimes the PAYE is overpaid due to your fluctuating income, such as if you have changed jobs during the year, or maybe you've only worked part of the year. Another reason you might receive a refund is due to working for families tax credits. These are payments for families with dependent children aged 18 or younger. If you did not claim these credits during the year but were in fact eligible, you might receive a refund when you file your tax return. These credits are designed to help with the costs of raising a family and can significantly reduce your tax liability. So, how do I feel about receiving my tax refund? Well, I'm pretty happy for sure. Well, personally, I like receiving a refund at the end of the tax year, and it's nice to receive than to pay. It's a forced saving of sorts. Now, I pay my own taxes, and I generally like to err on the side of caution because I know that it's just a timing difference where I will get my money back at the end of the year. It's much better than having a tax bill at the end of the year. However, there is a fine balance to maintain there because if it means that you're due a large refund, then that's lost cash flow. And that can be tough for many people out there at the moment. Ideally, you want to pay the right amount of tax. And with the recent announcement and the change in the tax thresholds, it will be interesting to see how payroll providers and employers actually tackle this with the change in tax rates that's happening during the middle of the year, 31st July, instead of at the beginning of the year. Let's hope employers will get this exactly right. So there you have it. If you like this video, then feel free to subscribe to my newsletter or follow me on LinkedIn or Facebook. And thank you for watching. See you until next time.